Yes, one of my workmates.
Well, I believe we're recording, so we'll go ahead and get started. Hello, everybody. Good afternoon. My name is Reed Redden, and I'm a sheep and goat specialist for Texas A&M AgriLife Extension. This afternoon, we're going to provide a sheep and goat market update. Most of these updates are kind of try to focus on the impacts that COVID-19 has had on the market over the last month or so. So our agenda for today is I'm going to give a little bit of a background. Our prior webinars gave more detail on some of this, but I'm going to give a little bit of a background. And then Dr. David Anderson is going to talk about the traditional lamb market and the updates that we've seen over the last couple of weeks. And then Mr. Bill Thompson in San Angelo is going to give us a non-traditional lamb and goat market update. And then Dr. Pope, who's been avoiding us the last few weeks, but has finally joined up and is going to give us a wool market update. So again, on a background, this is our third installment. We had our first one on April 1st and a 2-week follow-up on April 17th. If you want to go catch those web meetings, they're recorded. The easiest way to get to them is to go to YouTube. You can go to my YouTube channel, so just jump on YouTube and search my name, Reed Redden, Texas A&M AgriLife, and you should find my channel. Go ahead and subscribe to it if you would. I'd appreciate it. There's a lot of other videos. Generally, most of the others are about production versus the markets. Or you can just keep up with us on Facebook. It's at Tamu Sheep and Goats. We've got a really active Facebook page there where we announce these different meetings, and I also post recordings and a number of other things there. So the takeaway from our meeting 2 weeks ago, just further communicated that there's really two different trades that we're talking about: our traditional market channels and our non-traditional market. The traditional channel kind of continued to see some market woes. That's what Dr. Anderson told us 2 weeks ago. And our non-traditional market really is similar to kind of what it was last year about this time. We reiterated that there's two major holidays that have impacted all this: Easter and Ramadan. It seems like forever ago now that Easter was here, but it was only a couple of weeks ago, which is a big lamb demand season. And then we're in the middle of the Ramadan season, and then there's a big festival of fast breaking that comes up towards the end of May here. Food service and retail are the concern for us, since food service has been shut down. Just as a reminder, March 20th here in Texas, our restaurants had to close their doors, and about half of all the lamb in the U.S. goes through those. So we've been dealing with trying to channel that around. And also the wool market had been previously impacted by trade issues, and we'll touch on those a bit. So I'm glad you're tuned in today, trying to stay informed. There's other ways to do that as well. There's some podcasts that the American sheep industry is producing called Sheepcast. You can sign up on whatever your favorite provider is. And there was a recent discussion on assistance programs through the government, and there was also a consumer preference special edition that was put out. And in the coming weeks, mid-May, we're going to try to release a parasite podcast through ASI, and really happy that we're getting some of those type of programs out. I'd encourage you to stay up with your trade associations and all their efforts, whether that's the American Sheep Industry Association or American Goat Federation and your state organizations. They're all working really hard to try and communicate to legislators the impacts that COVID-19 is having to the industry, and how the different programs that are being released and government assistance could help the industry in certain ways, shapes, or forms. On our first webinar, Bill Thompson talked about our lamb and goat market forecast. I wanted to plug that again. If you haven't downloaded it and you have an iPhone, I encourage you to do that. Just search lamb and goat market forecast. I think you're actually supposed to use the and symbol, not the word written out and, to find it properly. But that app can help you stay up to date on the markets and help you try and make decisions whether you need to market your animals sooner or later. Essentially, it uses 10 years of data to predict what an animal is going to be worth month to month based off of standard rate of gain. And so that's kind of the pictures that we have here. Here's the front end of the app. You'll come in to select sheep or goat. In this case, I selected goat. and then you select the month that you would market them. The weight, they would be in pounds. You hit calculate, and it does all the math for you and gives a prediction of what's happened in the past. And then the last one on the right, if you go up there and click current price, it'll give you a current price for producers in San Angelo for that animal of its particular weight class. So encourage you to follow that. I will note that that app does not have 10 years of pandemic data in it. So we can't be 100% sure that it's going to follow those trends. So far it has, though. A bit of a timeline. I presented this one 2 weeks ago. Nothing's really changed except the governor reported earlier this week that Texas is reopening restaurants at a 25% capacity. And that'll even open up further if they're in counties where there's not a large number of cases and or cases don't rebound. So hopefully people have been craving lamb that they would get at their favorite establishment and are creating some reservations and going out and starting that channel again. So with that, I'm going to turn it over to Dr. David Anderson and let him go. Just let me know and I'll advance slides whenever you're ready.
Thanks, Reed. Yeah, just jump right in. Thanks for hosting this again. I think there's the way I was going to approach this in just a few minutes here is really let's take a look at slaughter and production. We'll take a look at stocks and imports and a couple of price things in the more traditional lamb market. You know, one of the things going on across the entire livestock and dairy industry is every one of them is really being hit by this. The choke point at packing plants either being closed or slowed down. Everyone is dealing with cutting production, basically. If we take a look at slaughter, you can see very clearly lamb is no exception. That solid red line is the 5-year average. The dotted line is 2019, and the solid blue line is 2020. And certainly, you know, it's pretty easy to see a pretty sharp correction in lamb and yearling slaughter. Now, you know, we ought to remember too, we're past Easter now too, but also, you know, it just shows pretty clearly the sharp decline in movement to packing plants that we've seen go on, really in response to retail shutdown in many areas and slowing. And, you know, I should mention too, not only slowing in packing plants, but also in processing. A lot of times meat goes on to some type of further processing, and we've got slowdowns there as well. And, you know, if we took a look at and added lamb in with beef and pork, our total red meat production, we're down about a pound per person in the U.S. per week in terms of meat production. To put that in percentage terms, we're down about 30% on meat production. And you know, lamb is part of that and certainly shows those same trends. Let's jump to the next one, Reed. I figured it'd be worthwhile showing dressed weights. Many of you know, oftentimes in our past, historically, we've seen weights ramp up dramatically. Animals get backed up as slaughter has slowed. So far, we don't really seem to be having that happening of animals that are moving through the system. Weights are actually down. And it's also fair to show certainly that, you know, usually around after that Easter time, we have some decline in weights also. And certainly it looks a lot more like what we experienced last year, just offset a week or so. But you can see that weights certainly aren't rising to be a problem based on the federally inspected dressed weight numbers. So if we put slaughter and weights together, we get production, which is the next slide, just pointing out that you can certainly see the decline in production, federally inspected production dropping from almost 2.75 million pounds per week down to 2 million pounds and holding there over the last couple of weeks at about 2 million pounds a week. So certainly a pretty sharp decline in production as well, really driven by slaughter and backed up by weights. So, you know, I usually think of thinking about a lamb market in these three important things: production, stocks, and imports. So the next slide is going to hit one of those next big factors, and it's imports. I couldn't remember if I'd switched them around. But so our import data, our monthly data, we have through February. The next monthly data, I think, will be released towards the end of next week, and we'll get monthly lamb imports. So far this year, lamb imports, at least with the data we have run below a year ago. Excuse me. If we look at some of the weekly data, now one of the problems in the weekly data is oftentimes the data gets reclassified or moves between weeks, and there can be some adjustments in that data. But if we look at clear into April in the weekly import data, we're actually, at least in that weekly data versus the same weeks the year before, we're continuing to run below a year ago. So, you know, imports anyway, particularly seem to be running below a year ago. And there's certainly been some slowdown in, you know, our two import sources are Australia and New Zealand, and some slowdowns in the process. They're also related to coronavirus and responses across countries and across industries. So, you know, I'm looking forward to seeing that data next week, and so we can get the full March data. But also the way the weekly's looking, it looks like imports may be down a little bit in April so far as well through the data that we have. So, you know, that's certainly a good sign compared to a year ago, and really huge monthly import numbers a year ago of 25 million plus pounds per month. The next slide is going to be cold storage. You know, we certainly know that cold storage, the amount of lamb, both domestic and imported, that's in cold storage can really weigh down our markets. We got that report a week or so ago, and so we can pick up the March data in terms of cold storage. You can certainly see, I think, the first set of effects of the slowdown in retail. By that I mean restaurants, and shifting that product to grocery stores. You know, 2 weeks ago, I used some data on grocery store sales, and we certainly saw in the data some pickup in lamb movement through grocery stores and away from restaurants. It wasn't enough to offset everything we lost through restaurants, but at least it was positive in moving some more product. But that does certainly imply that we had some more in cold storage. I think, you know, where we're headed with storage is really going to depend on that balancing act of, you know, if it truly comes out that we have, when we see the full data, reduced imports, and we certainly have reduced lamb production, we're going to balance those versus the loss of restaurant sales and the loss of grocery store sales. But certainly, I think one of the things that will help us in terms of really burdensome stocks on the weighing down the marketplace are really that we've slowed down production as well. So I think that at least provides us some hope of not really putting a lot of stuff in storage that's going to weigh down prices for a long time. So I think I got a couple more charts to show some prices a little bit. The next one should be some slaughter lamb, kind of a traditional market. I just pulled the Sioux Falls market, really to highlight again this dramatic decline in slaughter weight lambs, a more traditional market sense, really since we started seeing the sharp decline in restaurants closing and the drying up of retail orders through restaurants. We certainly see some sharp declines in prices for those heavyweight wooled lambs. And so again, some pretty sharp declines in prices. The next chart I have should be lamb cutout value. You know, one of the interesting things that's gone on in the market is we look at some of the cuts. We look at this cutout value, which is a 5-day rolling average. It has remained pretty high, even though we've had all this retail demand destruction, you know, restaurant demand destruction. One of the things we're really starting to see in the last couple of weeks is some declines in values, not only of the cutout, but in some of the weekly data on some of the individual cuts are really starting to decline in price. You know, in a way, it's kind of interesting that, you know, we've produced so much less, but we've lost so much retail movement of lamb, that kind of that supply and demand sort of offsetting each other. What lamb that has sold going into those retail markets, has sold at some prices comparable to a year ago or better for some of our cuts. Yet I think we're starting to see some decline in some of those wholesale values of some of the cuts. I did a program yesterday put on by a couple of my colleagues, Jeff Sable and Davey Griffin over in Animal Science. They're meat scientists. They do all kinds of barbecue stuff. They invite me to talk a little bit about livestock markets and meat prices. So I got the chance to participate in that yesterday. And one of the questions from the audience was from one of the restaurant guys. We've got skyrocketing prices at wholesale for briskets, ribs, you name it. Our big barbecue cuts are really skyrocketing in price with this log jam in the packing side, and which is really presenting sort of a double whammy to restaurants, right? We're finally states are opening up. We're allowing restaurants to open, yet their input prices for meat to sell are skyrocketing on them. So after all the damage they've seen, they've got higher meat prices. So the question focused on, are there some alternative things we might try in our restaurant? One of the questions was on lamb. Many of us might have been to a barbecue restaurant that's done some lamb. I've certainly been to a couple that have done basically a pulled lamb, a lot like a pork shoulder or pork butt. I thought that was a fantastic product. I've been to others that did, they had whole racks and you just told them how many pieces you wanted and they sliced you off a couple of those, lollipops or hatchet looking things. Really a good product as well. But I thought it was interesting that, there's some local Texas restaurants investigating if lamb's an alternative for them as they slowly reopen. And so I thought that was a good sign and certainly a story worth sharing with you all today. But certainly we're starting to see some declining prices. Stocks are where they are, imports. And with that, that's it for me. And I will turn it over to Bill. So Reed, thanks for advancing the slides for me. And certainly thanks for running this deal today and inviting me to be part of it. Thanks.
All right, we'll go ahead and jump into the non-traditional side. Go ahead, Reed. This is our looking at our monthly slaughter lamb prices here in San Angelo, and kind of the same story. If you'd have looked at this price chart in a vacuum, you wouldn't have known that we maybe are going through a pandemic here. So prices are actually well above where they were last year at this time here in April, and we're not that far below that longer term average. Things have actually performed fairly well. Reed. Looking at some of our seasonality charts and just kind of historically how the markets have performed through the year. Again, you'd have to say that our markets are functioning kind of like they always do this time of year. So the bad news is from this point into June and July, August, prices will continue to soften as volume continues to increase. As we've transitioned to more of a hair sheep animal, more of our volume is coming a little bit earlier in the late spring, early summer. But the rest of the country, we're maybe seeing more of that volume show up in June, July, and August, and that's probably also weighing down some of our markets. But so far, year to date, our markets are not behaving all that abnormally. Here we're looking at our weekly data. Initially there in early April, you can see the huge drop that we had when everybody kind of realized that we had a genuine problem here in the U.S. Prices dropped, I think the next week, but you can also see we had pretty good volume. Well, excuse me, the day that dropped, we really didn't have a lot of volume. The volume that we saw there is the previous week, but prices rebounded pretty substantially. The next 2 weeks we had two good sales. Just last week the markets were off just slightly, but we're still pretty good. And then markets actually came down a fair amount this last week, but look at the volume. We had an absolutely huge sale. I think Benny said they spent a full 12 hours at the sale barn on Tuesday selling lambs and goats. So it was a big week. Quite honestly, I'm glad to see that volume showing up, because the markets, we probably did overwhelm our buyers just a little bit. Probably wouldn't have been that big of a jump if we wouldn't have had that much of an increase in volume. But the good news is we're getting through those lambs, and we're not stacking them up in the country to just to have them come in and overwhelm our buyers later in the summer when prices are already going to be somewhat depressed. So again, in general, I don't see anything there that's is necessarily bad at this point. Here's a snapshot, and David kind of already mentioned this, but this is a snapshot of probably some of the lighter lambs that are going through, and this is from this past week in Sioux Falls, South Dakota. And you can see, click it one more time, Reed. On this bunch of animals, 907 head, they average 86 pounds, maybe just a little bit heavier than what we're going through. But we're selling animals, they're selling animals up there for $153 a hundred, and we came in just under $180. So again, we're in pretty good shape where we're at. Now, the concern I have is at some point buyers will realize that they maybe can source their lambs somewhere else for cheaper. And I think at that point, we'll see our prices come down. I hope that's not the case, but that certainly is a concern. So that's just something we got to keep an eye on. I'm not going to go into a lot of this in detail, but there's a couple of things I want to point out with this information. This is some of the cold storage, production, import data that David's already made reference to. And there's just a couple of things here. One, if you look at all the way back to 2001, the red line is commercial production. That red line it's for the whole, if we go all the way back to 2001, there is a downward trend in that. If you just come back and look at the last 10 years or so, it's actually fairly flat. Then I want to point out, looking historically at cold storage, the last really down market we had was back in 2011, 2012. Look what our cold storage was back then. And then look at what it's been back in 2015, and then again in 2018, 2019. You know, we had 25 million pounds in storage back in 2012. We're coming in at over 45 million pounds in storage the last two peaks that we've had. So a little bit different scenario there. And then you can also see the huge run up in imports that we've had. We're bringing in more imports as well. So it's something that kind of brings back to the forefront that some of these issues have actually become larger and a little more important to us in the last 5 or 10 years or so. Nothing I really want to talk about there. David's covered that pretty well, Reed. Same with that one. This is one that Reed's kind of keen on talking about. And all we're looking at here is our imports as a percent of production. And right now we're at over 260% of domestic production. And you can see here that throughout a lot of the year, I think you have to go back to the mid to early 2000s to find a year where we actually imported less than 100% of our lamb. So anyway, that kind of brings home the size of the import issue that we're dealing with. Let's transition here to goats. Here in the midst of this corona pandemic, goat market actually increased in the month of April here in San Angelo. So things are moving along pretty well. That's surprising. The demand for goat hasn't suffered apparently. Things are looking pretty good. Reed? Markets are moving somewhat like we'd expect them to at this point. This suggests that we maybe have another good month of relatively strong prices, and then prices really start to tail off into the heart of the summer there in June, July, and August, when we hit typically we hit our seasonal lows. But again, nothing that really jumps out as abnormal in our goat markets. You can see here last week, we actually averaged well over $300 a hundred last week. That happens occasionally, but last week was an exceptionally strong market. But look at the volume; we were just barely above average. This past week, we actually our prices were down just slightly, but look again, we had a huge increase in volume, and I'm glad to see that increase in volume, simply because if you look at those blue bars there, which are our 2020 volume, there weren't very many weeks there that were actually above average. Most of those times we're actually coming in below average as far as market volume coming to town. And I was starting to get a little nervous that we're setting ourselves up for some large runs in the time of the year where prices are already trending down. So I'd still like to keep seeing some larger runs of goats just to keep that problem from happening. But it looks like some folks took advantage of that and brought some goats to town last week. So in general, though, I think our goat markets are showing some strength. Some of the macroeconomic issues that I'm concerned about haven't showed up yet. We haven't seen the impacts of unemployment and full-on recession affecting our goat markets yet. We'll just have to keep an eye on things and see how they go. Reed, that's all I've got. Thanks.
You ready, Reed?
Whenever you-
Let's go to the first slide. There's a lot of speculation that's going on with all that is going on, and a lot of it's opinion, and so I just kind of want to focus on the facts of where we are, what has transpired, and try not to give too much speculation as far as what's going to happen or not happen. The fact is, the wool market prices and world currency compared to U.S. dollar, it's unsettled. There's just not a lot of confidence, and so it creates an unsettled situation. And I'll cover all of these a little more as we go through. But the wool industries, when I say that, I'm talking about from harvesting through to first stage processing wool that's already in the pipeline. Mills are starting back up, and this is occurring pretty much around the globe. The other fact is there's not a lot of stockpile of any type of wool, whether it's greasy wool, top, yarn, that is hanging over our heads. Obviously, we're aware of the oil prices that have just fallen through the floor. And then just this last week, the USDA has included wool and pelts in their new CARES Act, and we'll talk about that briefly. And then Department of Defense wool textile manufacturing here in the U.S. is operating. So those that have Department of Defense contracts are still keeping their plants open and operating. So let's go to the next slide. This is just a snapshot, goes back to 2017, and you can see whether in Australian dollars or US dollars, the market prices as they came out of Australia. And if we look at the period right along in here in 2018, we did see a high price. And then shortly after that, starting in late summer, we started to see a market correction. And we came down off of that high price, and then the market assumed its normal trend back upward. And that point right there is February of 2019. And we knew that our prices were fairly high and that would be a market correction. And if you look at that slope all the way down to August, end of August 2019, that would be what I would call just a normal market correction. The factors that David and Bill can talk to you about, that was just normal economics at work. But it finally bottomed out in August of 2019 and started back up again. And then it was, if you just drew a trend line from August through to the first part of this year, yeah, it was up and down a little bit, but it's pretty flat. The point that it's on right there is, I would attribute totally to the coronavirus and the market conditions that made the prices decline. Are we at bottom? I don't know. Next slide. This is just a kind of to give you a little better picture, maybe, that just to the left of the blue line there, that high point was in February of 2019, and converted to US dollars, that's around $7 clean. And if we go all the way to the bottom of where we are today on April 30th, we're at $4 clean. Now the currency today is 65 cents. It means that an Australian dollar only buys 65 cents of US product. Let's go back to the next slide. And this was in 2015. And we see the same general pattern. At that time, this was a pretty high price market. The blue line there on the to the left, or the left of the blue line is US dollars. That's $4.50 clean. The market came down, and if we track that all the way out for almost a year there, we ended up at $4.13 clean US dollars per pound. So again, if you flip back to the one before and just look at the the legend on the left there, we're at about 1,400 cents Australian. Now go to the next one. In 2015, we were at 1,140 cents. So again, there's a lot of things that we can worry about, but trying to get a relativity to this, we're still not quite as low in Australian dollars. The big difference is the currency. And we were at 78 cents back in 2015, and we're at 65 cents today. So those two factors fall into line there. Let's go back to the first bullet slide. Okay, the wool industries, as I mentioned, are starting back. China has been operating their mills now for about a month, probably not at full capacity, but they're beginning to chew up some wool that's already in storage. And we also have Australia wool market has never shut down. It's continued marketing wool throughout this entire period. New Zealand is opening back up. Their wool testing facilities are open this week, getting tests out. We've also got anticipation that their wool markets, wool auctions will open up again next week. And so things are beginning to maybe turn a little bit to where that we're not worried about, okay, when are we going to start consuming some wool. The next point is, as I mentioned, was there's not any stockpile of wool at any stage. Now, I know you'll hear that, well, there's 3 to 6 million pounds of carryover wool here in the United States from 2019, and that's true. Last week alone, Australia offered over 9 million pounds of wool in 1 week. So that amount of volume isn't going to create a heavy burden once things start get rolling again, and that wool can disappear in a hurry. It will take a little time to get this pipeline moving. It's like with any supply chain. You can't just throw all the wool in and have it all eaten up at the first stage processing. And so it's going to take every point along the way to help keep this pipeline moving to where we don't have any bottlenecks or blockages that will then start impacting our prices on top of maybe a shutdown like we've experienced. Oil prices are low. What does this have to do with wool? Well, it means that the chemical fibers, the polyesters, they're probably going to be cheap. That's the only opinion I'll put out there. That's usually what happens when oil prices get low. Polyester, tow, and fiber, they get low also. We don't necessarily compete, wool doesn't, with polyester. It's just we look at the ratios sometimes to see what the consumer might be more interested in when they go to the store to buy something based on the final cost of that product. The one thing that I'll say is having cheap polyester might allow some wool to get into fabrics that they can blend some polyester in and still keep the price points fairly low and start feeding this consumer market. The USDA, as I mentioned, has included some direct payments for producers that include both wool and pelts. The devil's in the detail. We don't know how they're going to implement it, what they're going to do. I know that ASI is working with them to look at market prices and where they were and where they are now, whether it's going to be a flat rate and you've got so many pounds of wool harvested and they pay you according to that, or whether they'll be using the wool market assistant loan program that's been in place over the year, well, since the early 2000s. We just don't know. And so the wool and marketing assistance program, that program hasn't really worked very well just because the loan rates are so low that it's not really advantageous. Well, you can't get a LDP, loan deficiency payment, or POP payment because the market is still above the loan rate. You could go in and take a loan out. You would have to core your wool and then submit it, and you've got 12 months to collect on that or to repay that. But it's just not been functioning the way that it initially started out back in when they first implemented the program. The manufacturers that have Department of Defense funding or contracts, as I mentioned, they're still operating here in the United States. That's primarily the International Wool Group, or what we know as Burlington Industries. And they furloughed some, but they've kept their mills, as far as the information I've received, still churning out fabric. And so anyway, I guess the bottom line is these are some of the things that we do know. Have we turned the corner? I don't know. We can speculate on how things are going to unfold, But basically, this is kind of the update right now. The last slide, Reed. This is from the Wool Brokers Association in Australia, just showing the retail sales. As you can see, the far right, China, Japan, Germany, France, and South Korea are showing lower retail sales for clothing. And even though the U.S. is showing some increase there as far as the UK and Italy. I don't really know how to interpret this. This is the first quarter. So going forward from this will probably be more telling than just this one snapshot, because there have been some contracts that have been canceled for fall delivery to the retailers in garment form. That is about all I have.
Well, thank you, Ronald. I appreciate that. Bill, David, thank you for what you provided as well. We've got one open question in the chat box. I encourage, if you have questions, you can send it in the group chat or try to unmute your mic if you'd like to ask a question. But Bill, would you like to address the question from Cheryl on, am I correct that the beginning of Ramadan would have influenced this spike? I assume that's the spike in the goat market.
Yeah, I can address that. It's certainly a contributor. I'll say that. The other thing to keep in mind, though, is that our sales volume all year has been pretty well below average, and some of that could just be some guys trying to get some orders bought to fulfill some of their market orders across the country. But I can't deny the fact that some of that increase in price, that strong demand, could be related to Ramadan. The reason I'm a little bit hesitant is we've got quite a source of data, price data, that we've been collecting for a number of years. We've got a decade of price data. And if you just kind of lay that out and looked at the price data itself and tried to identify religious holidays, I don't think you could do it specifically looking at the price data. Anecdotally, we can find some situations where a sale prior to a holiday caused prices to go up, but then I can find just as many anecdotal scenarios where people overwhelmed our buyers, brought in too many for our buyers, and we actually caused prices to drop prior to a holiday. So I'm a little bit up in the air in general, but I don't think we can deny that there probably was some impact this go around on that increase in prices. The other thing is to factor into that answer is why it spiked is it went down so far a couple weeks earlier in response to the virus. Some of that response is just, I think, the market realizing it probably overreacted a bit. So that's my 2 cents on it, Reed.
Thank you. We have another question from Apple Creek Farm. Any word yet on how the USDA will implement CARES assistance on the live animal sales side of things? Our economist, y'all want to tackle that one?
Last I heard, they are working on how they're going to do it, but there aren't any details out yet. But that it is included. But there's no details. Quite honestly, there's no details on, really not much on any of the livestock assistance.
Yeah, and the same goes with the paycheck protection plan or whatever it was. A lot of they made such a rush to get the aid out to people. They were slow in getting the details of how they're actually going to implement it. So I've not seen anything on that for the animal side of things yet. David, can you see that?
Yes.
question?
I'm reading.
Okay.
See my lips start moving. Hey, Reed, can everybody see the question? Should I read it?
Please, yeah, go ahead and read it.
Okay. From Cheryl, I'm located here in Eastern Oregon and we don't see our restaurant markets opening anytime soon. On a national level, do you see those producers who normally sell in the traditional markets selling lighter lambs in the ethnic market, possibly into late 2020 or 2021? So I'll take a shot at that one. I think our markets, while we talk about traditional and non-traditional, our markets are related in a way, in terms of weight of the animal is a big, kind of determinant there. So, I would tend to think, I think that's completely possible as people try to find a market for lambs, particularly on the weights. As we think about a weight for an animal in that traditional market, does it fit when somebody has a lamb that's ready for sale? And have you found that, non-traditional market buyer who come to certain markets already? Or we think of, San Angelo or New Holland, Pennsylvania, or wherever those various markets are. It's, in some ways it's more, can you get to, can we get buyers and sellers together in that response? On the first comment, I think that's a really, your comment's an important one. We're opening up restaurants also starting tomorrow, May 1st in Texas. Yet they can be open at 25% capacity, and you're trying to make 100% or more of the overhead you got, the bills you have to pay on 25% occupancy. I think it's going to be slow for a lot of places to open, particularly because they also don't know how many people are going to show up. And if you can only let 25% of your occupancy into the store, boy, I think it's probably one of the key things is just what is the pace of true reopening. Just because the announcement is there that you can doesn't mean folks are going to reopen. And I think there's also, for here anyway, I think we're going to see a heck of a lot of changes in how restaurants operate. From my call yesterday, part of, in Texas anyway, at a barbecue restaurant, there's no more barbecue sauce at the table. There's no more, serve yourself some, condiments and stuff. In fact, they are going to be, at a lot of places, rather than being served on a plate, you're going to be served on a takeout, throwaway styrofoam box or styrofoam thing. And so there's a lot of changes, I think, in our future for how restaurants operate, but the speed of reopening, boy, I think that's pretty important. And my guess, anybody else is about as good as anybody else's guess about what that true speed will be, how comfortable people will be going back out to restaurants. And I think that's going to differ by region also. But I think that's a great question.
All right, we got another question in. We'll direct it to Dr. Pope here before he falls asleep on us, but I'll just paraphrase. Is there any difference in the world wool markets between, say, Fredericksburg or Rock Springs? And this person lives in the Bronxville, and they hear different opinions about where they should market it and how that would affect the price that they would get. So in the world wool market and where you take it, does that have a big influence?
As far as your marketing center, probably not. We've got about 3 major buyers here in the United States that export and sell domestically, and they're going to take all kinds of wools and find the market that is suited for it, whether it's here domestically or overseas. So there's different places around the world that use certain types of wools, certain price point types of wools, And so, depending on the quality is what it is. And so, just like I mentioned with some of the Department of Defense contracts, they're more focused on 22 micron wools. We don't produce many 22 micron wools here in Texas. Now, they may take some of ours and blend with it, but our wools might be going more into an international market. There's certain, whether it's China, India, Egypt, Vietnam, they find their own niche in this world market. And you could say one's, as we use the term, a bottom feeder. Price is the biggest criteria, and then quality is next. Others, it's quality and then followed by price. So whether you're producing good wool in Fredericksburg or Rock Springs or Belfast, South Dakota, they're going to wind up in the right hands, getting into the right market.
Thank you, Ronald. Bob Whitson has sent in a question. Will this increased uncertainty from this market disruption cause more ranchers to shift out of sheep production? I'll lead into it, and then we can have our economists or someone who's been around this industry a bit longer than I have. But I would say the majority of the people that are still in sheep production are pretty committed to it. So if they're shifting out of it, it's probably extremely dire situation, and they're probably going into some level of bankruptcy, and they're just not able to continue to produce. I could be slightly off on that. Do any of our other speakers want to add to that comment?
This is Bill. I don't disagree with that assessment, Reed. The shrinkage has already occurred in a lot of the sheep industry. So I agree with you. The people that are there are kind of committed to staying there. They're also probably somewhat diversified. They've got maybe some natural resource activities as well as maybe some cattle. If this affects them, the sheep, I don't see them getting out of the sheep market. There'll be individual cases, but by and large, I don't expect a lot of constriction in the sheep industry as a result of this, at least in Texas.
I will say one thing to that. Price matters a lot. I mean, collapsing prices in some areas, as we've shown on some of these charts, is pretty critical on people's bottom lines, and it sure puts a lot more pressure on people. And I don't think I think price matters a lot, and I'll leave it there.
Yeah, no, that is important. In Texas, there is a lot of people that have gotten into the sheep industry recently, especially with the hair sheep interest, and these market woes may affect their desire to stick in it if they haven't been in it that long. And if people are following the markets and watching these reports in this area, it'd be hard pressed not to put strong consideration into shifting some of that into meat goat production, given the strength in those markets recently, if they're able to do that. So with that, we have one more comment from Patty, and that is, no one is pulling up to a takeout situation asking for rack of lamb. I think that's a very important comment. Rack of lamb is a very expensive cut. I eat lamb almost every day. I had leftover lamb just a bit ago. And cold lamb is probably not the best. You want something that's nice and warm and served at the right temperature. So rack of lamb is probably not an option. Maybe the best case would be a lamb taco or something that's not as high end and a little bit more friendly to not staying very warm. But
this whole thing's been really hard on our high end restaurants, where you would find a rack of lamb, steakhouses, particularly higher end stuff. I mean, we don't folks don't typically get a steak for takeout either. And I think, that's where, particularly these, I think that's hit some of our higher end cuts really hard. And that, I think that's exactly right. The type of restaurant and the type of food they serve is pretty important on whether their takeout thing survived or not.
All right. Well, we're just coming up on an hour. I really appreciate our speakers for taking time to come in and share this information with us today. Y'all have any closing comments? Hearing none.
Thanks.
Thanks very much.
Thanks, Reed. You'll have these posted on Facebook later or on YouTube?
Yeah, as soon as we can get the recording pulled off the website and brought up onto YouTube, we will send a link out to everyone that's pre-registered for this via email. And then you can also find it on YouTube, and we will post that YouTube link on our Facebook channel, our Facebook page. So thanks very much.
Thank you.
Take care. We'll see you
Have a
next
good
time.
weekend.